Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and joining my colleague Yatin, Mota. Well, Yatin, once again, the markets, they were quite volatile today given the US President's 25% tariff imposition on India, along with other penalties that he has spelled out for maintaining trade ties with Russia. But we did see Sensex saw a good up move till about 1:30 to 1:40 p.m., up over 1,000 points from day's low, and even Nifty surged about 300 points from day's low as well. But after 1:40 p.m., we again saw some slippery slope, and eventually Sensex and Nifty both ended with about 0.4% decline. It is the monthly expiry day, so for Nifty, and the real test has been whether Nifty can hold on to that 24,800 mark. But yes, eventually that's also got fizzled out, and Nifty ended with about below that 24,800 levels as well. But yes, for the July series also, the Nifty has been down more than 2.5%. If you look at some of the sectoral indices, that was the worst hit during the July series. That was your Nifty IT and the defense sectors. They were the worst performers of the series, while the pharma and FMCG, they stood quite resilient. Even today, the FMCG pack did quite well, with about Nifty FMCG up about 1% as well, given that some of the domestic-oriented names have been gaining traction after export-oriented themes saw some bit of a selling pressure. Of course, it also comes on the back of FMCG giant HUL also reporting good set of numbers. So on the back of that, we can see some of the consumer names did well on the back of that too. But yes, the likes of textiles, shrimp stocks, auto component majors, all of them took a severe sentimental impact. Yet then, the bounce eventually got sold into. We even had that monthly expiry and then the tariff announcement. And now experts have been pointing out to this penalty that Donald Trump has spelled out, which can be another layer of trouble for markets, given that it's quite uncertain on what Trump has on his mind.
Correct, and the market initially got spooked, because of these announcements made by the US president, and obviously we saw a big fall in the opening hours of trade. But I think the markets were already aware that India is probably not going to do or strike a trade deal in hurry. The government also continuously has been communicating that the UK trade deal will be a gold standard, and they would keep national interest above every trade deal, especially the agri and the employment sensitive sectors. Exactly to that, we had the deadline which is almost approached. Probably we will have to face 25% tariffs plus penalty. The penalty component obviously will be spelled out later, but nothing to worry. We don't have a big kind of a trade with the US, and probably the kind of conditions that the US has made needs negotiations probably, which will happen later in August. So yes, market continues to remain volatile. But we have a lot of earnings from HUL to Maruti which came in today. We saw some stock reactions also. So I think now the markets will move on and focus on earnings rather than the trade war.
That's right. All right, with the trade negotiations are on, and officials will be visiting in mid-August as well. So we'll watch out on any negotiations that could take place from the tariff front as well. But coming to the top gainers and movers on the Nifty 50, HUL definitely the top performer of the day. Good June quarter numbers, and we'll discuss about the stock later in the segment in detail today. But Towers with about 3.5% gains. Geo Financial also did well with about 2.5%. The fund infusion from promoters made the stock do quite well with about 2.5% gains coming in for the counter. Eternal also did well, 1.7% gains after the stock did snap its 3-day losing streak as well. Other than that, we can see JSW Steel did well for the fourth consecutive session with about 2% gains. Kotak Mahindra Bank also did well with about 1% gains. ITC, ahead of its June quarter numbers, which will be due tomorrow, also did well in today's trading session. However, on the way down, if we look, Adani Enterprises, that took a hit with about a 4% decline. We did see that in the June quarter, profit is halved on the year-on-year basis, and that's why the stock has also declined in today's trading session, topping the Nifty 50 losers list. Tata Steel also with about 2.5% cut. Brokerages have been a little cautious after the Q1 results, so that is why you can see a decline of about 2.5%. Sun Pharma, some of the pharma stocks did take a hit today. Sun Pharma, Dr. Reddy's Labs, both of them eking again a cut of about 2% itself. And NTPC not doing well after yesterday's trading session, some profit booking on the counter with about a 1.5% decline. But yes, we can also see the index heavyweight, that is your Reliance Industries, also dragging the benchmark with about a % decline itself. So yes, all in all, subdued sense of markets despite the tariff volatility. Monthly expiry also played into the market sentiment. But yes, the broader end of the market, small caps and mid caps once again continue to underperform. Small caps, mid caps, both of them seeing a cut of about 1% each. But yes, Yatin, what are you gathering from this space? Any shakers and movers that you want to underline?
If you look at the movers and shakers, Sagility posed the numbers, hit 10% upper circuit. That stock moved. Keynes also, posed the earnings, moved 10%, one of the top FNO gainers. HEG, we had a turnaround quarter wherein the profits zoomed clearly, and we had a turnaround on the margin front also. That stock moved 7% in trade. What was not doing well, Apar Industries, and they have a big export to the US markets. They supply a lot of electrical equipments. Probably because of which the stock was down 8%, panicking in trade. Birlasoft, Aarti Industries also down 5% each. But clearly we had stocks like Schneider, GVTND, Bosch, the MNC lots hitting fresh 52 weeks high on the Nifty 500.
That's right. Let's take some of the stocks right now and let's break down some of the stocks that did grab limelight today in today's trading session. HUL, like we were talking about, one of the top Nifty gainers as well. We did see some good numbers coming in from the FMCG heavyweight. Volume growth stood at about 4% for the June quarter, which is higher than the street that was estimating about 3 to 4% growth. Revenue also for the quarter increased by about 4% from last year to about 15,931 crore rupees. EBITDA, however, for the quarter declined by about 1.3%, but profits were up about nearly 8% from a year-on-year basis. As a result, we could also see that the EBITDA margins have contracted by about 120 basis points from last year itself. But yes, the management in its investor presentation said that the gross margins are likely to improve on a sequential basis because of, there will be certain better mix and accelerating end-to-end net productivity program, which could accelerate the growth forward as well. The management also had mentioned that the EBITDA margins are likely to remain in 22 to 23% range over the next few quarters, while gross margins may see some moderation. But yes, commentary on demand, outlook on the strategy and of the new management and the steps to revive the volume growth are some of the key factors that we need to watch out for. And we also have a new MD and CEO, Priya Nair, who will be taking charge, from August 1st as well. So we'll watch out on how the stock behaves in the upcoming sessions. But yes, Yatin, you were there in the presser today. Take us through the key highlights on what the management has talked about.
Right. The management is now expecting, a gradual recovery, especially in the rural markets. And, clearly when it comes to the FMCG pack, post a good monsoon so far, it seems that the rural markets will be a new focal point. Also, if you talk about, the promoters, they have seen some management changes. That is something we'll watch out for. When it comes to HUL, they believe that the EBITDA margins will be maintained in the 21-22% kind of a band. And moving forward, consumption environment is stable, and clearly rural still is outpacing the urban demand. So, given the fact that Zomato also had given a guidance that earnings as well as the overall sales growth will improve, especially in the grocery segment, probably something HUL reiterated, and the stock almost 4% higher, HUL being one of the top gainers in the Nifty today.
That's right. FMCG stocks doing well. Earlier it was Tata Consumer and now it's the heavyweight HUL as well. But now let's quickly talk about M&M because the stock saw decent recovery from today's low, eventually settled with about flat with a negative bias. But the company did post a decent set of June quarter performance. If you look at the numbers, revenue and profit, both of them grew in double digits. Operationally also EBITDA saw a healthy growth, but margins is where it suffered as it saw some contraction over there. The company's auto segment saw some good SUV volumes, which rose about by 22% on a Y-on-Y basis, and it has also expanded its tractor market share to about 45%, which is highest ever in any quarter that the company has achieved. Now, the management also remains quite positive, saying that they have been firing on all cylinders because we can say that from all parameters, it is an upbeat quarter for M&M itself. But yes, brokerage reactions, that also remain quite positive. If you look at Jefferies, they have maintained a buy call on the counter and they've given out a target price of about 4,000 rupees per share, and they expect mid to high teen SUV growth in FY26 as the company is set to launch 3 new SUVs next year itself. So Jefferies has stated that it is one of their preferred buys and they project about 18% core EPS CAGR over FY25 to 28 itself. On the other hand, if you look at Morgan Stanley, they have also given out an overweight rating and a target price of about 36.88 rupees. However, Citi was a little conservative because they have cut the target price and they've seen some concerns which is around rising commodity costs such as steel as well as precious metals as well. But Yatin, all in all, good numbers coming in from M&M, and while recovery was positive, the management expects urban areas to demand to recover as well going ahead.
Absolutely, and if you look at M&M, clearly the margin performance was quite strong. In fact, if you look at the UV segment and the electric vehicle segment, the management is now expecting Q2, Q3 onwards, probably the PLI benefits also would start flowing in, and that would aid the overall margins in the electric vehicle segment, which is right now lagging the combustion engine segment. So if you look at the UV portfolio, that is doing well, tractor is doing well, and the electric vehicle segment, which is a new pillar of growth, that would also see margin improvement, which is probably the reason why most brokerages have rolled over the targets, increased them. However, the kind of run-up that we have seen in the stock plus the trade war, the stock almost ended flat in trade, almost closing near that 3200 mark.
Okay, all right. All right, let's quickly take another stock in focus, that is your InterGlobe Aviation. The stock did well despite the numbers were quite weak for the June quarter. If you look at the quarter performance, it saw about 20% decline in the profit. Revenue grew modestly in a single digit, that is about by 5% on a year-on-year basis, and margins, that saw a sharp contraction of about 170 basis points on a year-on-year basis. Now, the air travel was also impacted during the quarter due to the cross-border tensions that we saw in the month of May, and then we had Air India plane crash, which impacted the sentiment in the month of June as well. So, as a result, the company saw yield also dropping by about 5% itself. However, what uplifted the stock was the positive commentary that came in from the brokerages, because if you look at Motilal Oswal, they gave out a buy rating on the counter, and they believe that the company's resilience amid all of these geopolitical disruptions and operational headwinds keep the stock quite afloat, and of course the company's growth trajectory quite positive as well. Now, they believe that the company's effective cost control, strong network execution and consistent passenger growth could uplift the stock going ahead as well. And they expect that the stabilizing fuel cost, return of grounded aircraft to service would improve the performance going ahead in the upcoming quarters as well. Even Elara Capital, they were also quite positive on the counter because they have also given out a buy rating, because they expect the weak crude oil prices and the stable aircraft deliveries from Airbus will actually help re-rate the stock going ahead as well. So Yatin, despite the June quarter lull, brokerage commentary that remains quite positive, and the management is also quite positive on maintaining their full year capacity guidance.
Absolutely, and the reason why the stock was flying in trade today after almost a flat open. So InterGlobe Aviation, that continues to roar almost at the day's high, 3% up for that stock post earnings and a good conference call. But what was also doing well in trade today was Jio Financial, with a standard disclaimer that the promoters of Jio Financial and Moneycontrol are the same, and hence before buying or selling the security, you need to take advice. But Jio Financial, that stock remains in focus. Today the stock gained nearly 3-4% in trade, has been up over the past 2-3 trading sessions ever since the company announced the fundraising plans. Today, if you look at the stock, it reacted positively after the announcement by promoters, which will be infusing nearly 16,000 crores in the company via subscription of warrants. The warrants will be issued to the tune of 50 crore shares upon conversion, and the price of this warrant will be around 316 rupees 50 paise. Obviously, the funds which will be raised in Jio Financial will be used to strengthen the financial services business, which comprises of insurance, AMC business, as well as the NBFC business. So clearly, the kind of funding and the cash inflow in Jio Finance will help propel its growth plans. And we have two promoter entities, but one is Sikka Ports and the other one is Jamnagar Utilities. Both of them will be subscribing to nearly 25 crore warrants each. Post the conversion, when successful, the stake of the promoters from the current 47% will be now 51%. So good fundraise, and reacting to that, the stock on your screens gaining by nearly 3% in trade.
That's right. That's coming in for Jio Financial. But yes, that's all the stocks we have for now. Tomorrow is the 1st of August and the start of a new series and month, and also the tariff deadline. So we'll watch out how market behaves through the last trading day of the week itself. But yes, earnings reaction will also continue. We have more companies which will be reporting its first quarter performance. Adani Power, Godrej Properties, Delivery, all of them reporting their June quarter performance tomorrow itself. So watch out for those names. But until then, it's a wrap from Yatin and me. Thank you for tuning in to Closing Bell.